Mr. Machenil, thank you so much for being with Bloomberg TV. Your global markets revenue is up 1.7%. Your pre-tax profit came out ahead of our estimates. Is that a relief after the difficult end of 2018?
Well, if we look at the global banking system in the first quarter for BNP Paribas, it basically had a good business evolution in all three poles. Then second element that we had is the volume growth. If you look at it for the bank, up 4%, positive as well. And then the revenues were up 3.2%, mainly driven by IFS and CIB. So that is basically fine. And if we look in particular, as I said, to the bottom line, to what it leads, it's 1.9 billion, up 22%. If we look specifically at the activity that you asked about CIB, for example, at CIB, we have been doing some evolvements in 2018 to be better digitalized, but also to have capital markets, a joint venture between global markets and corporate banking, to serve our clients better. And we have borne the fruit of that in the first quarter.
Have you been rethinking your strategy after the difficult end of 2018?
Let's look. We have in 2018, we have been rethinking our overall global market strategy. But as I said, we have been rethinking our global market strategy. We have been looking at digitalizing. We have been looking at creating the capital markets joint venture between global markets and corporate banking. And that is what we have been doing. And that has basically borne fruit as we saw more than 30% in uptick in the top line. Then when it comes to equities, the market took time to come back and to gradually pick up versus what we saw in the market at the end of 2018. So that's basically what we observed.
You had a major beat in fixed income and equities came out below estimates. Is there still maybe some kind of drag effect from the beginning of the quarter?
If you look at fixed income is bearing the fruit of the changes that we have applied. So we have digitalized. We've also created the joint venture capital markets to really help people needing to issuance. Investors, we brought them together and we borne the fruit of that. When we look at equity was a bit still impacted by what we saw in the market at the end of 2018. Basically meaning that customers took some time to come back into the market and there was a gradual pickup in the first quarter. And when you compare this first quarter with a gradual pickup towards a strong first quarter a year ago, that is the evolutions that you get.
Do you still see some momentum in the CIB business going forward?
As what we have been doing is really adapt ourselves to be really serving our customers. So when we created capital markets, we really wanted to serve our customers that need issuance and our customers that are investors stronger together so that we can really bring them a service which is quite uniform and integrated. And so that is something that we saw in the first quarter, that we grabbed the fruits of it, and we'll see if that market continues, but for the moment it bodes well.
You've done 169 million euros of cost savings in Q1. Do you think you may have to consider some job cuts like some of your rivals, including in France, are doing?
Yeah. If you look at the cost cuts that we have in the first quarter, it's an additional cost cut, part of our plan. So if we take the sum since the launch of the plan, we have reduced costs by 1.3 billion euros. And for the rest of the year, we will add another 500 million of cost savings, bringing the total to a 1.8 billion reduction. So that is what we do. How do we do this? We optimize systems, we basically use natural attrition, people that go and so forth. So that's basically the concepts that we use overall the group.
You've stopped some activities, including prop trading, commodities, derivatives in the US. Do you plan to exit some other activities?
As we said in the previous quarter, we announced that we would review some of the CIB activities. If these CIB activities are not leading to a multitude of cross-sell opportunities, then we will basically get out of those activities and redeploy the capital in activities that make sense.
So where are you in this review? Have you identified some geography or activities already?
Well, the thing is, there is the two that you mentioned that we basically step out. And when we review the rest, it also means that we interact with customers. For example, if a customer is taking one product, we're going to discuss with him and saying, hey, why are you taking one product? Wouldn't you be interested in others? And if the answer is no, then we might decide to get out of that product to do others. So that is the process that we're doing. It's not just pinpointing yes or no. It's a discussion that we engage with our clients.
In France, the French retail revenue is in line with the estimates, up 0.1%. Pre-tax profit is a beat. How do you feel the continued low rate environment is going to impact the French retail going forward?
If you look at the French retail, if you look at the volumes, for example, you see a pickup in volumes. And that's basically the beat that we anticipate. If you look at the GDP evolutions in France, they are still above what the overall European one is. So this is what we will continue to do, and we've guided that, yes, we anticipate this trend to continue.
So you believe that the business confidence in France that is suffering a little at the moment is not going to impact French retail growth?
If you look at BNP Paribas, the French retail activities, it is slightly impacted by the social environment that one might observe. However, again, if you look at the first quarter, revenues held up well, volumes are up. So that is basically what we see. Now, of course, in that light, we are doing things. We are an engaged bank. So yes, of course, we have lowered some of the banking costs of the more fragile customers. But as I said, we anticipate that GDP will continue to grow and that we will continue to accompany that.
More generally, if we look at Europe, we've seen that the ECB is taking more time than we thought in exiting QE and increasing rates. What does that mean for BNP Paribas, and what does that mean for your margins?
Yeah, well, if you have these interest rate environments, of course, what we do is we aim to serve our customers with several other products which are fee-generating products, and that's basically what we put into our plan. When we made our plan ramping up to 2020, we didn't anticipate a rate hike. So from that point of view, for us, we stay on our plan, which is diversifying the products towards our customers, serving fee and commission-generating services like what we do with Arval, leasing, and the likes.
So that's not going to make it more difficult to achieve your ROE target, for example, of 9.5% by 2020?
No, if we look at our objective of the 2020 plan, basically on the retail side, we're roughly in line. Because we assumed conservatively that the interest rates would not really move ramping up to 2020. The impact that we saw is on the CIB side, that the revenue pool generated all over in the banking system would be a tad lower than what was initially anticipated. And that is why we have adapted our CIB, and we saw in the first quarter that we are bearing the fruits of this adaptation.
We've seen the failure of the merger between Deutsche Bank and Commerzbank. Were you surprised?
I will not comment on what other banks are going through.
If the German government would make it possible, and if the capital requirement regulation would make it possible, would BNP Paribas be interested in some of Commerzbank's or Deutsche Bank's activities?
BNP Paribas, in our plan ramping up to 2020, we really focused on changing the bank through digitalization, which basically means changing the customer behavior and intrinsically really making them digital, interacting with the bank. So that basically means for us, we are not interested in any acquisitions.
But don't you think it would make sense to create some cross-border banking European champions?
If we look at the landscape where we are already a pan-European bank. And so we are very active on that. We keep on growing through our digital fronts, like, for example, what we are doing in Germany, what we're doing in Scandinavia. We really have a platform of growth, which is exactly our 2020 digital plan.
If there is no acquisition planned, does that mean more asset disposals could come on the table? We've seen the disposal of the Indian business, SBI Life Capital, impacting the first quarter with 300 million euro gain. Do you see more of this coming up?
As we said, we are reviewing the balance sheet. So if there are some activities which in the end do not make as much sense as maybe 20 years ago, that can lead to a divestment. But there is no specific plan to sell things, and there is no specific points we have on the agenda.
In the short term, in 2019, we're not going to see anything of this scale of SBI Life.
Listen, I mean, if there is something, I will tell you the day we announce it, but there is nothing in the wings.
Finally, what's the most challenging uncertainty going forward? Do you see trade tensions as the most challenging uncertainty for BNP Paribas, market volatility, continued pressure on the interest rate environment. What worries you the most?
Yeah, if you look at the point of attention, the real point of attention is to see that the digitalization evolves well. As I said, the core is that we can well develop. And why am I mentioning this as a point of attention? Because developing a digital tool is relatively straightforward. You can do that within confines of the cost and so forth. However, what is very important is that the customer really uses that tool for you to adapt the way you digitally interact. So that is a bit the point of attention in the developments we're doing.
But that's not an uncertainty, that's kind of a necessity of the bank. What do you see as an external factor that could perhaps impact the environment for BNP Paribas?
It's the usual suspects, as you mentioned before, is that it is the market environment that can be, or it's the margins. But that is something, it's an uncertainty, but we are planned and we are adapting for the bank to be ready in this environment.